Good day, students, once again. Let me take this opportunity to record this question on property, plant and equipment, which in abbreviation we say is PPE. But don't forget that property, plant and equipment also include vehicles. We are given information in a bit slight different way, which information is provided in general ledger accounts, and we have a ledger account for furniture at cost. Then after we have another ledger account which is accumulated depreciation on furniture. Then we proceed further and we see that there is another ledger account. While I'm still deleting here, there is another ledger account which is ledger account on vehicles at cost, and below that we have another ledger account which is accumulated depreciation on vehicles. Then after we are provided with the additional information, and under the additional information we are then told that the information that is provided, which is additional, say that depreciation on both furniture and vehicles is provided for on the straight line method, and it is provided at 20% per annum. So that is our depreciation for both the furniture and the vehicles at the same percentage. And I want you to be able to convert the percentage into useful life, meaning the number of years, because 20% is 20, 20, 20, 20 for 5 years, which is 5 times in other words. So we can say 100 divided by 20, this will give us 5 years. So now that means this furniture, or our furniture and our motor vehicles, are depreciating over a period of 5 years. And I just want to say this before time: 5 times by 12 will give us the total number of months in 5 years. 5 times 12 is equal to 60 months. And I'm doing this because I will need it further in my calculations of depreciation. In fact, in my calculation of total accumulated depreciation for the period the asset was in the business up until the day it was sold. Now we are required to prepare or to show all the depreciation calculations of Pecco Scrap Dealers for the year that ended 31st of August in the year 2005. So now that means if our accounting period ends on the 31st of August 2005, meaning it will start on the 1st of September in the year 2004, because a year starts 1 day after the end of the previous month. So 1 day after the end of August will be the 1st of September. Remember, 1st of September in the previous year. So now meaning our year started on the 1st of September in the year 2004, and it ends on the 31st of August 2005. Take note of the dates, they are very important, more especially in the property, plant and equipment note. And then after number B, we are required to prepare the property, plant and equipment note. Don't forget that say V, because vehicles are also part and parcel of the property, plant and equipment. So now it says for the financial year that ends on the 31st of August 2005. And take note that we have 24 marks and here we have 12 marks. This in total is out of 36 marks. And if your paper is out of 100 marks, that means you already have 36% in your disposal to take all of this 36% and the rest of the questions that you still have to answer. But this is a very crucial and very important question that is very popular almost across all assessments. We are required that we must answer and comply with the requirements of the International Financial Reporting Standards and the appropriate business of appropriate to the business of the entity. And we are also required to note that accounting policy are not required. We don't have to specify the accounting policy that these financial statements were prepared using the historic basis method. that is not necessary. So now that we are provided with this information, please have at the back of your mind the 20%, which is equal to 5 years, and 5 years, which is equal to 60 months. Have that at the back of your mind. I don't have to come back here and do this reminder. Remember again of the requirement, we are calculating depreciation calculations of who? Of Pecco Scrap Dealers for the year that ended 31st of August 2005. That means we are calculating depreciation for both the furniture and the motor vehicle for the current year, meaning depreciation for the year that ended 31st of August 2005. So now it does not mean that we don't need to calculate depreciation for the previous year. It will depend on the information that we are provided, but it might be necessary to do so, more especially if there is an asset that has been sold. So now if there was an asset that was sold, we'll also need to calculate the depreciations for the previous years for the assets that were sold. But the main focus now in number one is the depreciation for both the furniture and the vehicle, because they just said depreciation for the company, not for the specific asset of the company, meaning for all the assets that this company has or held during the current accounting period. Now let us go to the information that we are given and see how far we can analyze and respond to it. And I will answer all the questions before I go to the property, plant and equipment note in terms of the calculations. Please be mindful of that. Now let's analyze first our ledger account. Our ledger account, we have for the furniture at cost, which is the opening balance on the 1st of September 2003. Remember, we are doing the books for the year that ended 31st of the month of August 2005, and this year started on the 1st of September 2004, and it will end on the 31st of August 2005, or it ends 31st of August 2005. That means on the 1st of September 2003, this is not within our current accounting period. This is before the 1st of September 2004, meaning it is the previous year. So we do have that opening balance. We just have to look at it, but it will not be useful for our calculations of depreciation, but it will help us to some of the calculations that we need. So we have this opening balance, which is 250,000 rands from the previous year, and we have trade payables and bank, which is installation. That means we bought a furniture and the cost of the furniture was 120,000 rands, and there was something that needed to be installed on this furniture, and the installation cost in this furniture amounted to 15,000 rands. That means the cost of this furniture must have been a total of 120,000 rands plus 15,000 rands. That means the cost of the furniture that was bought in the last year accounting period, meaning 1st of or 31st of May 2004. Remember, this is still in the previous year, not in the current year. I want to highlight that one very clearly. So now we have the furniture that is worth 135,000 rands plus the furniture that was in the business beginning of the year, which is 250,000 rands. So now we had a total furniture that amounted to that is 135,000 rands plus 250,000 rands. That means the cost of the furniture is 385,000 rands after there was a purchase of furniture costing 120 plus the installation of 15,000 rands. That is why the balance of the furniture end of last year was 385,000 rands, and it became an opening balance at the beginning of the current year, which is 1st of September 2004. Remember, our accounting period starts on the 1st of September 2004 and on the 1st of August 2005. Let me draw this line again here. Draw the line very clearly. Our year is ending 31st of August 2005. It started on the 1st of September 2004. This is the year that we are dealing with. Now we see the balance of 385,000 rands when on the 1st of September 2004. Now we are talking, and this balance is at the date, meaning is at the beginning of the current year. That means this is the balance that we are definitely looking for as an opening balance. Now that there is an opening balance, we can see that on the 30th of June 2005, remember now 30th of June 2005, it is somewhere maybe June, July, August, maybe here, maybe the 30th of June is here, 30th of June, around that date, 30th of June 2005, there was a transaction that took place, and that transaction was bank, meaning cash was affected. Therefore, now that transaction was a purchase of what? Was a purchase of the item of furniture, meaning we bought furniture. Remember, furniture increases on the debit side because it's an asset. So the minute we see a transaction on the debit side, it indicates that there was a purchase of this item. And if we see a transaction on the credit side, meaning there must have been a sale or a disposal, meaning furniture must have been disposed. Remember, I'm excluding the balances that are carried down. I'm referring to the main transactions. So in this case, there was a purchase of the furniture and the furniture was bought for cash. 66,000 rands was the amount. And this transaction took place during the current accounting period. So it must be recorded when we are responding to the property, plant and equipment note. And we also need to calculate the depreciation for this furniture because it was bought at the end of June, meaning we need to account for July and for August, meaning now for 2 months depreciation when it comes to this furniture that was bought at the cost of 66,000 rands. So we know that depreciation here will be a necessity for us to calculate. Then now there's no other transaction on the debit side. Then on the credit side, let us look. On the credit side, it says furniture realization. In some terms, we call this asset disposal. This is sometimes called asset disposal, and it's very popular to other institutions. So now there was a furniture that was sold. Remember I said on the credit side of the ledger account of the furniture, when we see transactions, unless it's a correction of error or there was a mistake, but we are not doing correction of error here. That means everything is recorded on the correct side. That means when you see a transaction on the credit side, it means there was a sale of this asset. That means furniture with the cost of 123,000 rands was sold. Now, if it was sold, therefore now obviously it must be recorded on the credit side. And this date is becoming very important once again. When is the date here? The date is on the 30th of June. 30th of June 2005. So now if it's on the 30th of June, meaning we'll need to have July and August. And it was 30th of June 2005, meaning 2 months before the end of the year. Meaning we also need to calculate depreciation for this furniture for 2 months in the current year. And not forgetting that there was a furniture that was bought, again, that I spoke about previously, that was bought on the same date this furniture was sold. Meaning we needed this furniture, although we also wanted to sell the old furniture. So hence we bought another furniture on the same date the other furniture was sold. So now we are very clear on that one. That means we need to calculate for the depreciation on this furniture. Now the furnitures that were not sold, we need to account for them. And also remember, now we had furniture that amounted to 385,000 rands, and we sold furniture that amounted to 123,000 rands, 123,000 rands, meaning these are the old furnitures. 385,000 rands minus 123,000 rands. So now this becomes 262,000 rands. The 262,000 rands is the cost of the old furniture. The old furniture that was there previous year, it was not sold, it remained in the business. So now if you say the old furniture plus the new furniture that was bought, which costed us 66,000 rands, we can say that it gave us 328,000 rands. that becomes the cost of our finisher at the end of the year. After we have said finisher available beginning of the year minus finisher that was sold plus finisher that was bought will give us finisher at the end of the year, the cost of finisher at the end of the year. But we need to be mindful of the fact that we are to calculate depreciation for three types of finisher. The old finisher, which costs 260, how much was that? 385 minus 123. The one that cost 262,000. This is the old finisher, the one that was in the business last year and also in the current year. Then we also need to calculate, this is the old finisher, we need to calculate the depreciation for the sold finisher and the new finisher. So now we'll have to calculate depreciation for three categories of the finisher, if I may call it like that. So now let us begin calculating the depreciations of these three finishers. But I want to highlight the fact that for the finisher that was sold, remember this is the one that was sold. For the finisher that was sold, we also need to calculate the depreciation from the date it was bought up to the date it was sold, the total depreciation of this entire finisher. They are telling us that further that it was bought on the 1st of September 2003, meaning in the beginning of 2004 accounting period. So we need to be mindful of that. But remember, this finisher was sold on the 30th of June 2005. I want to highlight that. So now that means this finisher was in the business. I hope I did not say this differently in my beginning. If it was sold at this time, it means this finisher was in the business at the beginning of September. It was there October, November, December 2004, around December here 2004, end of the year December 2004. This finisher that cost 123,000 was still in the business, meaning September, October, November, December, which is 4 months, January 2005, February, March, April, May, June. Then in June, this finisher was sold. Therefore, now it will be September, October, November, December, January, February, March, April, May, June. That means this finisher was in the business for a period of 10 months. In the period of September to December, it is 4 months. September, October, November, December, 4 months. Then from January 2005 up until June, from January somewhere there up until June, that will be 6 months. So now this finisher stayed in the business for a period of 10 months before it was sold, or it was sold on the 10th month of the current accounting period. So now let us be clear on that, and let us then now begin doing our calculations, calculating the depreciation for the finisher. So now we are focusing on the finisher first. Finisher, and we are calculating depreciation of the finisher. And I said to you that we need to classify the finisher into the old finisher. The old finisher depreciation, we need to say how much is the cost of the old finisher. The old finisher is 262,000 rands. If you remember that, I calculated the 262,000 rands. Why am I saying it's 262,000 rands? It is because at the beginning of the year, our finisher costed us how much? 385,000 rands. That was the cost of the finisher beginning of the year, 385,000 rands, and we sold the finisher that costed us 123,000 rands. So the old and the remaining finisher will be 262,000 rands. So that is the one that I'm focusing on first. We multiply this by 20%. Remember, the old finisher was not sold, meaning it remains in the business up until the end of the year. So now we term this by 20%. It gave us 52,000 rands 400. 52,400. So we are clear with that. That is for the old finisher. Then now we need to go to the second category of the finisher. The second category of the finisher, it is the sold finisher. It doesn't matter which one you start, we have the sold finisher. And the cost of the sold finisher is 123,000 rands. We multiply this by 20% in order to get to the depreciation of the sold finisher for the full year. I always prefer to calculate it for the full year first. Then you say 123,000 times by 20%. The depreciation will be 24,600. 24,600 for the full year. But this furniture was only in the business for a period of 10 months. If you remember that, I said it was sold at the end of June 2005, meaning it was in the business from September up until there around June, which is September, October, November, December 2004, then January 2005, February 2005, March 2005, April 2005, May 2005, June 2005, meaning a total of 10 months in the current year. So now that means it must have been here for 10 months, 10 over 12. Then this will give us depreciation only for 10 months times by 10 over 12. That means the depreciation for the current year on furniture will be 20,500. I want to highlight this is current year and this is current year just to say CY. Now, because this furniture was sold, I need to know the total depreciation from the date it was sold up until from the date it was bought up until the date it was sold. Now I need to know when was this furniture bought so that I can be able to calculate its depreciation from the year it was bought up until the year of the current times by 20%. Let us check when was this furniture bought. This furniture was bought on the 1st of September 2003, meaning it was in the business from 1st of September 2003 up until 31st of August 2004. This is a period of 12 months, meaning it was bought at the beginning of last year. So now it was in the business last year for the full 12 months up until current year, which is 10 months. That means the full last year it was in the business. So we can just multiply by 20%, which gave us 24,600 rands. That means now the total depreciation for this sold furniture will amount to, then we have here 24,600, will amount to a sum of 24,600 plus 20,500, which is 45,100. This is the total depreciation from the date this furniture was bought up until the date this furniture was sold. If you wanted to calculate this in another way, you could have said this furniture was in the business for 22 months. If I may say so, not 22, I think it is 24, because we said here it is 10 months and here it is times by 12 over 12. It will give it the same amount, which is the full year, which is now it is 12 months plus 10. This becomes 22 months. So you could have said again 23,000 times by 22 over 60. Do you know where the 60 is coming from? It's because the useful life of this asset is 5 years and the number of months in 5 years is 60 months. So now I just want to say how many months was the furniture in the business and how many months was this furniture supposed to be depreciating, which is 60 months, 60 months being 5 years, 5 years being 20%. I said please remember that one. You can go and refer to it. Now if you do this, it will give you exactly 123,000 rands times by 22 divided by 60 months. We get exactly 45,100. That means this amount just give us the total depreciation from the date this asset was bought up until the date this asset was sold, which we have already calculated this to be 45,100. It becomes very important at this point in time to calculate what we call carrying amount or carrying value or book value, to say how much was the carrying amount of this asset at the date it was sold. Remember, carrying amount is cost minus accumulated depreciation, and our accumulated depreciation is 45,100. So now this will be able to give us the carrying amount of the furniture that is sold, which is 77,900. This is the carrying amount of the furniture at the date it was sold. And I want to remind you of this once again. Remember, the minute you have the carrying amount, you can also be given what you call the selling price, or the price at which the furniture was sold. Then if there was a selling price, then we'll have to compare the carrying amount with the selling price to determine either have we made a profit or a loss on the sale of the furniture, but that is not the focus in this question. So I'm just highlighting that because it is quite important. In most of the times you'll be required to calculate the profit or a loss on the sale of an asset. Now this will be the carrying amount. We need this amount when we are doing the property, plant and equipment note. Now we have done two finishers. Finisher, which is the old finisher. We have done the sold finisher. Then we need to deal with the new finisher. New finisher, which one is the new finisher now? The new finisher is the one that costed us 66,000 rands, the finisher that was bought during the current year. Let us go and look at that type of the finisher. Now the finisher that was bought during the year was bought at the end of June, meaning it was in the business July, August, only for 2 months only. Now we need to, and I want to highlight this, very important. Remember, the sold finisher was sold on the same date, but we did not say it's 2 months here, we said it's 10 months. Take note, we said it is 10 months. We calculated from the date the asset was bought up to the date it was sold. Remember, at this date it is sold, meaning by July and August this finisher is no longer in the business. So we can't calculate depreciation for July and August for 205 for this finisher because it is no longer in the business. But for this one, it was bought on the date which is 30th of June, meaning in July 2005 this finisher was in the business. In August 2005 this finisher was in the business, and we need to calculate depreciation for that. But for this one, we're calculating depreciation for 10 months, meaning for the month the asset was in the business up until the end of June 2005. I want to highlight that one. Sometimes students get easily dissuaded with these types of questions. Now we are calculating depreciation only for 2 months for the finisher that was bought during the year, the new one. Forgot to say new, I just wrote the amount now. The new one costed us 66,000 rands, times by 20%, times by 2/12. So now we have 66,000 rands times by 0.2 times by 2/12. This gives us 2,200 rands. Now the depreciation of the finishers in total. Want to highlight the total depreciation. Total depreciation for all the finishers, it will be 2,200 plus 20,500. Remember, only the current year, this 24,000 for the previous year. Then we also add 52,400, which is the old one, plus 52,400 rands. This becomes 75,100. This is our total depreciation for the finishers during the current year. So now this will be our depreciation for the finishers. Then now another thing that I need to draw into your attention is the ledger account called accumulated depreciation. I want to make sure that I do this for you because it's very crucial. It's not a requirement, but you'll understand something after I'm done with this and I'm doing property, plant and equipment note. Now we need to record depreciation now on the credit side, which is the depreciations for the current year, and that must be taken into account for all the finisher, the one that was sold and the one that was bought and the one that is still remaining in the business, the old one. Therefore now we need to account for the depreciation. Remember, once again, some institutions consider this, others they don't have any issue with it. The finisher, take note, this finisher was sold at this point in time, so now its depreciation must have been recorded at the time it was sold. 2005 June, the date is 30th. There must be a depreciation that is recorded at the date, and that depreciation we have calculated for it, and it came up to an amount of 20,500. If you remember that was 20,500 rands for the 10 months this finisher was in the business. There is our 10 months. So now we need to acknowledge that the depreciation at that point in time was captured, or must have been captured, 20,500. all other furnitures, meaning the new furniture, the old furniture, will be recorded at the end of the year, meaning in the year 2005 and 31st of August, which is 31st of August. That is where their depreciations will be recorded all together, and those depreciations all together will amount to a sum of 75,100 minus 20,500. Then this will be 54,600 rands. This will be 54,600 rands. Remember, at the end of the day, our total depreciations still remain the same as 75,100. That is the main focus. But these depreciations are just recorded at different times. So please be mindful of that. And I want to highlight again this because I might have left you behind, that the depreciations we have added, it is 54,000, it is 52,400 plus 2,200. I added these two, meaning the new furniture and the old furniture, the one that will remain in the business up until the end of the year. So their depreciation will be accounted at the end of the year. So that is where that amount comes from. Then after now, we need to calculate the total of our accumulated depreciation, which is 48,250 opening balance plus 75,100. This gives us 123,350. 123,350 minus 45,100. Hope you get that. It will give us 78,250. This becomes our balance carry down. Remember now, on the debit side, we need to write the total realization. We need to write the total accumulated depreciation for the sold furniture, and the total accumulated depreciation for the sold furniture from the date it was bought up until the date it was sold is 45,100 rands. So that is where that 45,000 that I deducted comes from, 45,100. So now this is the closing balance of the furniture, meaning the balance it will be 78,250. This is the balance brought down. Now under the accumulated depreciation, this is an opening balance, this is depreciation during the year, and this is the closing balance. All this must be exactly the same when we do the property, plant and equipment note. Please be mindful of that. It's very crucial to note it. Now I have highlighted that crucial point. Then we go to the second asset. Only 32 minutes that I've spent with the furniture. Then now we go to the vehicles. Our vehicles, very similar again. We have vehicles at the cost, and the opening balance is on the 1st of September 2003, which is the previous year. Once again, we are starting our year on the 1st of September 2004. Do you see that? So our opening balance is this amount. But in the previous year, if you see then the previous year, there was vehicle realization, meaning they sold a vehicle on 30 November 2004. Do you see that? On the 30th of November 2004, there was a sale of a motor vehicle, and it was captured and recorded correctly. Now we are looking at now at the date which is the 1st of September 2004. On the 1st of September 2004, which is our opening balance, there now in our opening balance we have an opening balance of 352,000 rands. Now this is 352,000 rands opening balance of our motor vehicles. And at the same time, we can see bank on the debit side, which indicate the cost of the motor vehicle that was bought on the 1st of March, costing 65,000 rands. And again, there is another motor vehicle that was bought on credit, trade payables, it was bought on credit at the cost of 93,000 rands. So this is the cost of the assets that were bought in terms of motor vehicles. Then on the other side we have realization, meaning vehicle that was sold. Vehicle realization, this is the sale of the motor vehicles, and these vehicles were sold on the 31st of August, meaning at the end of the current year, meaning these vehicles, they stayed in the business for the full year, and they say they were bought on the 1st of September 2003 and 31st of July 2004. That means there are two motor vehicles that are included here. We can see that 255 is for two vehicles and they were bought at different dates, and another one was bought on the 1st of September. Let us look if was there any purchase on that date. On the 1st of September, which year? 2003. 1st of September 2003. Let us check that. The 1st of September 2003, there was a purchase of the motor vehicles, and these motor vehicles were bought and they costed the company 400,000 rands. And there was a purchase, but we cannot be able to identify now from this date, 1st of September, how much is included there and for which vehicle. Then let us look, because the 400,000 rands is more than the 255,000 rands. Let us look at another date. Then on the 31st of July, we can see that there is bank of how much? There is bank of 30,000 rands, meaning there was a motor vehicle that was bought that costed us 30,000 rands. And they also give us more clarity, and they say bought 1st September was 225,000 rands, meaning on the 1st of September there was a vehicle that was bought which costed 225,000 rands, meaning included in this 400,000 rands is a motor vehicle that costed us 225,000 rands. That means, which is the one that was sold. Therefore now we can say 225,000 rands minus 255,000 rands, and we discover that 30,000 rands is the other vehicle that was sold, which is included in the cost of 255,000 rands. And they make that note very clear that these vehicles are made of 30,000 and 225,000 rands, and the sum of the two gave us 255,000 rands. So that is also very important to be highlighted. And we can see that the one that was bought on the 31st of July, it is costing 30,000 rands. So you can say 30,000 rands minus 255,000 rands. That means the rest of the other vehicle that is included there will have been costed the company 225,000 rands. So this was a little bit tricky. So now when it comes to depreciation here, we need to be very clear that although they were all sold at the end of the year, which is not a problem, but they were bought at different dates. But in terms of calculating depreciation for the current year, that won't be a transmesh, because they were all sold at the end of the year. So we can just calculate one depreciation for them, because depreciation is calculated at the same rate, which is 20% per annum. Now let us look further again. We are very clear. Now let us do the calculations. Remember, we had motor vehicles beginning of the year that costed the company 352,000 rands. 352,000 rands minus 255,000 rands of the cost of the vehicles that were sold, meaning 97,000 rands is the cost of the old vehicles, meaning the remaining vehicles. So now let us calculate depreciations for vehicles. Then now we are under vehicles and we are calculating depreciation for the vehicles. Now we need to calculate for the old ones. The old ones, we can say that they have costed the business 97,000 rands. We know that the old ones will be in the business for the full year. So now if they will be in the business for the full year, then we can say multiply by 20%, which is our depreciation of 20% per annum. Then now easy, we multiply this by 20%, it gave us 19,400, meaning depreciations for the old vehicles is 19,400. Then we need to calculate depreciation for the sold vehicle. Remember, under sold there is number 1, which is the one that was costing 225,000 rands. You know that we have deducted the 30,000 cost of the other vehicle, times by 20%. So now that means we say 225,000 rands times by 0.2, it gave us 45,000 rands. So now meaning it is 45,000 rands. Then we need to know that because this was sold, we also need to know the depreciation of the previous year, so that we can be able to know how much the total depreciation for this vehicle. We need to know that the vehicle that was bought for 225,000 was bought on the 1st of September. That has been highlighted to us there, and they said bought 1st of September. And we said the one that was bought on the 1st of September would have been the one that is costing 225,000 as given to us. So it was bought 1st September 2003, meaning it was there from 2003, beginning of the year, up until 2004, the full year. Then we are doing the year 2005, so this is 12 months, meaning it was bought beginning of the year. That is very exciting. So now we can say 225,000 rands times by 20%. I don't know where this 12% is coming from. Times by 20%. So now obviously the depreciation for this will be 45,000 rands. So now that means the total depreciation will be 90,000 rands. Remember, this is for the current year. This is the current year. We need to highlight the current year. And at the same time, we could have said 225,000 rands times by, in case this was not needed, we could have said times by 24, because this asset was in the business for 24 months. Divide by how many months in 5 years, which is 60 months. This will give us exactly 90,000. We say 225,000 rands times by 24, divide by 60 months. This gives us exactly 90,000 rands. Just to verify that amount, but make sure that your months are correct. Then now there was number 2 of the vehicle that was sold, and the one that was sold was costing, or costed the company 30,000 rands, and we multiplied this by 20%, and multiplying this by 20%, it will give us the cost or the depreciation for the sold motor vehicle that was sold also at the end of the year. So this is 6,000 rands. Now we need to know, when was this motor vehicle bought? We know that this vehicle was bought on the 31st of July. They told us it was bought on the 31st of July in the year 2004. So now meaning it will be August, September, meaning it was in the business only for 2 months in the 2004 accounting period, which is August. I know, not 2 months, only 1 month to be honest, because our accounting period ended in August. So it was only in the business for 1 month. One month. It was bought end of July. It stayed in the business for 31 August. July, August, meaning it was in the business only for 1 month in the accounting period of the year 2004. Then we started 1st September 2004, which end 31st August 2005, which is our current year. So now we only need depreciation for the previous year for this asset only for 1 month. So now we do that, we multiply by 20%, we multiply by 1/12. This will give us depreciation for the previous year, times by 1/12. It will give us just 500. So that means this will be 6,500. Meaning if we say it was there for the full year, remember this is the current year, and it was 12-month year and 1 month, meaning it's 13 months. That means we could have said 30,000 times by 13/60. And you do this if you don't need to calculate depreciation for the current year. 30,000 rands times by 13 divided by 60, that gave us 6,500 rands. So now this is another calculation of depreciation from the date the asset was bought up until the current year. Then we go to, we have the old, the sold, then we need to calculate for the new. Under the new one, there was a new one that costed us how much? That costed us 65,000 rands. It was bought on the 1st of March 2005. So it will be March, April, May, June, July, August, 6 months. The cost is 65,000 rands. So we say 65,000 rands times by 20% times by 6 over 12. So this will be 65,000 rands times by 20% times by 6 over 12. It will be 6,500. Remember, this is now calculating March, April, May, June, July. It was, just look at the date again. Use it 6 months, end of or beginning of March. So it's March, April, May, June, July, August. So that will be 6 months exactly. That was accurate. So we have our 6,500 rands. Then we have our second new. This was new number 1. There's new number 2. New number 2 costed the company 93,000 rands. And the 93,000 rands of the vehicle was bought on the 31st of July, meaning it will be in the business only for the month of August, end of the month, starting of the following month. So it's only 1 month. 93,000 times by 20% times by 1 over 12. This gave us depreciation only for 1 month. And we say 93,000 rands times by 20% times by 1 over 12. It gives us 1,550. 93,000 rands times by 20% times by 1 over 12. 1,550 rands is the depreciation. Then we say plus 6,500. It gives us 8,050 plus 6,000 plus 45,000 plus 19,400. We get to our total depreciation now. We get to our total depreciation. Our total depreciation is an amount of 78,450. And there's something that I forgot here, to be honest. And what have I forgotten is the carrying amount for the 2 vehicles that were sold. Carrying amount for the 2 vehicles that were sold. Another one which was sold and the accumulated depreciation was 90,000. So we need to acknowledge that carrying amount in there. The carrying amount will be cost of 225,000 rands minus 90,000 rands. Carrying amount is 135,000 rands. And the carrying amount for this one, not forgetting cost minus accumulated depreciation. The cost is 30,000 rands minus accumulated depreciation of 6,500. It gives me 23,500. So the total carrying amounts will be plus 135,000 rands. Plus 135,000 rands. So the total carrying amount as a one amount will be 158,500. This is the carrying amount for the vehicles that were sold, for all of them, because there has to be one amount at the end of the day. And now that this has been done, then now we can slowly go to the ledger account called accumulated depreciation on vehicles. And this accumulated depreciation, I'll still draw a line here, though it might think there is no space, and erase this. There is enough space, to be honest. The reason why I'm drawing here because there's only few transactions to record. Now here at the end of August 2005, we record depreciation, because in this case all the depreciations will be recorded at the end of the year. and the total depreciations that I calculated, I wonder why did I erase, was 78,000 some odds, 78,450. Yes, it is 78,450 of the total depreciations that I need to record. So that 78,000 must be recorded under the accumulated depreciation ledger account. Let's remove the under the accumulated depreciation. 78,450, and that's all that we needed. Then after we add the two, 78,450 plus 68,800, we get 147,250, 147,250. Then now we need to record all the accumulated depreciation for the sold motor vehicle realization, all the total accumulated depreciation for all the motor vehicles that were sold, and the total accumulated depreciation for the sold motor vehicles will be 90,000 for the first vehicle and 6,500 for the second vehicle, which becomes 96,500. So we'll have here 96,500. Then after we say minus 96,500, how much do we get? We get 50,750. What is 50,750? It is the balance carried down of the accumulated depreciation, which becomes a balance brought down, which is 50,750. This is the closing balance brought down of the accumulated depreciation. You might wonder why I'm doing all of these long calculations. They are not very long calculations until now we respond to what was required, which is calculating the property plant and equipment note. Now I'm doing question number 2. I'm done with number 1. Property plant and equipment note, we have it for furniture and vehicles. We have it for furniture, and the second asset is vehicles. Second asset is vehicles. Please don't forget to write the total. This column is very important, more especially when you do the statement of financial position. You'll need that amount, so please always draw the total. Just want to make sure that the main figures are there, because the total is just a matter of recording the total. We have here carrying amount on the 1st of September 2005. 1st of September 2005. We record the cost at the beginning of the year and accumulated depreciation at the beginning of the year, and we draw a line here and we draw a line here. Then we have a line here that says movements. Sometimes you don't have to do this movements during the year. Let me just during the year. Then we have additions at cost. Additions at cost, it is the asset that you bought, the cost of the asset that you bought. Then after we have disposals at carrying value. Disposals at carrying value. Then after we have depreciation for the current year. Then after we have carrying amount at the end of the year, 31st of August 2.5. We have the cost at the end of the year and accumulated depreciation at the end of the year. I'm just trying to be as quickly as possible in terms of writing. Writing is not important to me than explaining. Now, the minute the skeleton is done, everything is done. What do we do now? We go straight to what we have done already, and we say how much is the cost of the furniture at the beginning of the year. We go to the furniture. Opening balance of the furniture 1st September 2004 is 380,000. 385,000 rands. So now I need to record that 385,000 rands. I need also to record the opening balance of the accumulated depreciation on furniture, and the opening balance is 48,250. It is 48,250. Then after, I need to ask myself, was there any furniture that was bought during the year? Yes, the cost of the furniture that was bought during the year amounted to 66,000 rands. Remember, additions at cost. Additions at cost. So I need to record that 66,000 rands. Was there any furniture that was sold during the year? The answer is yes. How much was the carrying value for that furniture? The carrying value is in my workings. Where are my workings? Here are my workings. The carrying amount of the furniture that was sold, I calculated that to be 77,900, which is cost minus accumulated depreciation of 45,100 from the date the asset was bought up until the date the asset was sold. Carrying amount or disposal carrying value 77,900, and it must be in brackets. Then I need to record the depreciation for the current year. I need to go and look at my ledger account. How much is the cost or is the depreciation? My depreciation as a once amount, it is 75,100. If you remember that total, which is 20,500 plus 54,600, that amounted to 75,100. So that is where that 75,100 comes from. Hence, it becomes very important to show it as one amount, 75,100. Then after, I need to know how much is the cost of my furniture in the ledger account at the end of the year. How much is the closing balance? The closing balance of my furniture cost is 328,000 rands. I take that closing balance, I write it under closing balance, 328,000 rands. Then I go to my accumulated depreciation ledger account. What do I look for? I look for the balance at the end of the year, the closing balance. So now let us look at that closing balance. The closing balance of the accumulated depreciation, 78,250. 78,250, that's what I want. I record my 78,250 and I'm done and dusted. Then after, I go to my vehicles. Then I say vehicles, I need cost at the beginning of the year in my ledger account. Vehicles cost at the beginning of the year. How much is it? Beginning of the year is 1st of September 2004. Beginning of the year is the 1st of September 2004. 1st September 2004, how much is my opening balance? 352,000 rands. I record my 352,000 rands. Then after, I go to the opening balance of the accumulated depreciation. Opening balance is 68,800. I record my 68,800 as it is. 68,800. Then I say, was there any motor vehicle that was bought during the year? The answer is yes. How much is the cost of the vehicles? Because it was not only one. There was a vehicle that cost 65, another one 93,000. So I need to add both of them. 65,000 rands plus 93,000 rands. This gives me 158,000 rands. This becomes the cost of the asset that was bought during the year. Additions at cost, 158,000 rands. Was there any motor vehicle that was sold during the year? Yes. How much is the carrying value? I need the carrying value. Disposals at carrying value. Remember, carrying value, I need to add both of them because I remember there were two of them. Carrying value, there was a carrying value that amounted to 23,500, another 135,000. The sum of the two was 158,500. 158,500 is all that I want. 158,500. I write the 158,500. 158,500 is the total carrying amount. Then I look for the depreciation for the current year. Depreciation for the current year was 70,000 something, 70,250 if I'm not mistaken. Depreciation for the current year, or 78,450. I calculated depreciation for the new vehicles this 6.5, 1,550, plus current year only, which was the full year for the 30,000, and plus that 45,000, not that one, the first one, 45,000 for current year, plus 19,400. Let me just verify it. 19,400 plus 45,000 plus 6,000 plus 6,500 plus 1,550, which is 78,450. 78,450. Then now that this is done, then I go to the closing balance. Closing balance of motor vehicle is 255,000 rands. Balance at the end of the year, 255,000 rands. That's all that I want. This is the closing balance at the end of the year. I need the closing balance of the accumulated depreciation now. Closing balance of the accumulated depreciation is accurately calculated as 50,750. 50,750. 50,750. 50,750. Now, these are the calculations, and everything now is done and dusted. And the minute now things look like this, then you should be very glad, and I'm hoping that they are balancing, in fact. Then you can say minus 255,000 rands. This gives me 170. Okay, I deducted something wrong now. 255,000 minus 50,750. This gives me 204,250. Then I say 328,000 rands minus 78,250. This gives me 249,750. Then I calculate my opening balance, 385,000 rands minus 48,250. This is 336,760. 352,000 rands minus 68,800. It is 283,200. Then I calculate my movements. 66,000 minus 77,900 minus 75,100. Obviously the total will be negative 87,000 rands. This depends to the figure that you have. Remember, additions are positive, disposals are negative, depreciation is negative. 158,000 minus 158,500 minus 150 or minus 78,450. It gives me 78,000 negative 78,950. Please make sure that you transfer the figures under the totals, guys. It's very important, very crucial. Now, how do I verify my numbers? Verification says that my opening balance plus or minus, depending to the sign, plus or minus, in this case it is minus. My opening balance plus or minus this, it must give me the closing balance. Plus or minus equals closing balance, equals closing balance. So that means if I say 283,000 for vehicles, 200 minus 78,950, how much do I get? I get 204,250. That means I am 100% correct. Then I go to finisher, opening carrying amount 336,750 minus net of my movement, which are negative, minus 87,000. It gives me 249,750. Remember, I'm separating, guys, because these figures are negative. Why they are negative? Because the total of the negative figures is bigger and the total of the negative figures is bigger. That is why now I end up with the negative figures. But you work with what you have. If they are positive, then you'll say plus. They can be positive, it's not always negative. In fact, most of the times in other scenarios, they tend to be positive. But you'd work with what you have. Make sure that you do everything with a right principle. With that, guys, thank you very much. You've been a wonderful audience, and I hope that you have understood something. God bless you, and study very hard. Thank you.